It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? Welcome back to a new video. Now in this one we're going to be going over imbalances. So there's two different terms when it comes to imbalances. There's efficient pricing and inefficient pricing, and as you probably guessed already, and you've probably watched throughout the course already, you probably understand the imbalances already, right? So pretty much when you see an imbalance, it's just a gap in between, right? And what this means is that both buyers and sellers in the market are not getting a fair chance of liquidity. Whereas when you look at balanced pricing or efficient pricing, right, price is pretty equal. So the higher the wick and the lower the wick in the bullish market are meeting. Okay, or it even could come a bit higher and the wick could come a bit lower, but the moral of the story is there's no gap between the wicks in the 3 candle move, because this second candle is the one with all the most pressure. So whether it's buying pressure or selling pressure, and then within the first and third candle, the wicks need to be meeting or above or below in order for it to be efficient, right? But if there's a big imbalance in price, pretty much what that's saying is when you see this, there's liquidity there. So price will come back down eventually and tap into the imbalance and just take the liquidity, I guess, right? To go a bit more in depth, if inefficient price will usually come when we see 3 bullish or 3 bearish candles in a row. So like I said, 3 candle move, you got to focus on the 3 candles, right? So when bullish inefficiency is formed, so price moving upwards and there's an inefficiency in price or imbalance, it essentially just means that the market has nothing but just buyers, right? There's, like I said, both buyers and sellers didn't get a fair chance of liquidity, right? It's only just pure dominant buyers, right? Where sellers haven't had haven't had a chance to get involved, and the same is true for when we see bearish inefficiency. So when prices moving to the downside, it's just pretty much the exact same thing. And there's only been sellers in the market where buyers have not been able to get involved. So when price inefficiency forms, most times than not, price action will come back to refill that price, to rebalance price, and then potentially carry on in that desired direction, right? But what you'll see from the pretty much sort of if we just look at these two, right, inefficient and efficient, what you see from this one is the wick of the high, right, and the wick of the wick low of the 3rd candle, they just don't meet. And if you look at this efficient pricing, the higher the wick on the 1st candle and the lower the wick of the 3rd candle, they do meet. Okay, they don't have to meet, but they just do meet. Okay, so there is efficient pricing. Okay, so if we jump on the charts, like I said, this is something that won't take long to to pick up at all. All you got to understand is what we use this with order blocks. So when you combine an order block with an imbalance below or above it, that's powerful. That's what makes a valid order block, and which you probably would have learned by now, right? So if we just look at this move here, right, ignore all of this, right, we don't care about this, okay? But if we just look at this here, so here, and here, right? As you can see, there's imbalance here, imbalance here, imbalance here. So this tells us that there's only sellers in the market and there wasn't any buyers. However, in order for price, like I said, it's all supply and demand. In order for price to rebalance itself, there needs to be a seller for the buyers, pretty much. Because like I said, when you learn the basics, you understand that for every buyer there needs to be a seller on the market, right? But in this case, when we see imbalances, there is no buying pressure. It's all selling pressure. So price will need to come back to meet its sellers and look for a price to sell at. So what it'll do is it'll come back in and tap into the imbalances, whether it's partially or fully, like it did in this case. So this was fully taken, this is fully taken, and this was fully taken, right? But this wasn't really taken. However, it will do at a future price. But if you focus on the big imbalances, like these big ones here, they're the ones to look at, right? And if we look at the most recent order block in terms of a breaker structure, this could be a valid supply zone, right? Why is this a valid order block, you may be wondering for a start? Well, because there is not only a breaker structure below the lows, but look at this candle and this candle, right? It's left a big imbalance. So there's liquidity resting above here. So if we're looking to sell, we know that it's got to rebalance itself in order for price to continue lower. So this is why structure is everything, because if structure is bearish and we see an imbalance and price pulls down and then pulls back up and we're looking to sell with the overall bearish structure, it should continue in that desired direction, because institutional order flow, right, in order for price to continue bearish, well, saying that if price is moving upwards, right, and if you understand the institutional order flow, so just supply and demand, when banks have long positions open at every swing point, because obviously they control the market, so every swing point, if they have positions open there and they're in bearish market, why the hell would they want to go above and just continue above? They will eventually, but why would they want to do that when we've just switched bearish, right? In this case, we just switched bearish. So we only want to be looking for sells, order block there, and also an imbalance, right? These are imbalances, okay? However, when you look at efficient pricing, you usually see it more in ranges. So when price is trending, you see the imbalances. So in this case, there's an imbalance. Price tapped into it, right? Partially, it tapped into the 50%. Short-term reaction to the upside, right? It wicked the new high, so the high, the range wicks. Then it came back down, filled the full imbalance, came back down, filmed this slight imbalance there. I mean, you could probably potentially class that as an imbalance, but there isn't really a solid imbalance there. As you can see, the structural low got violated, and we can switch to a bearish market, in which price mitigated this order block here, right? What makes this a valid order block? Again, imbalance in price here, okay? So it's always a 3-candle move you've got to look at. Imbalance there, imbalance there, imbalance here. It balances everywhere. So this is why price moves up and down, because when price moves up, there's imbalances in price along the way. So price has got to move down in order to rebalance it. So that's why market structure makes its highs and lows, and the price will then again continue higher. It's left imbalances here on the down move. Price has filled it now. It's left imbalances here on the up move. Price has filled it now. So that's why price moves up. But the reason why price is making smaller complex pullbacks on the smaller time frames is because it's just filling imbalance and filling imbalance, because the market is driven just by liquidity, okay? But efficient pricing is again like this, look at this wick, look at this wick, look at these wicks. There's no imbalances, right? Look at this wick. It's there's no imbalance there, okay? It's all balanced pricing. This is balanced pricing. So yeah, that's pretty much what I mean by imbalances. Like I said, I didn't really want to keep this video as long because it's not something that should deserve to be long. If you understand it, you understand it. It's one of them. It's like when there's a gap in price. When there's a gap in price, that's imbalances. Okay? I don't trade imbalances. If you trade imbalances, then that's fine. When we've spoken about breakers, you understand imbalances now. So you can trade breaker blocks based off an imbalance, right? That's a different strategy, but I don't place the trade up. But when you see it, you can actually take advantage of it, right? But now you understand the imbalances. Now you understand why price moves up and down and does what it does, is because it's all driven by liquidity. When there's an imbalance in price, right? Because like I said, there needs to be a buyer in order for there to be a seller. Or there needs to be a seller in order for there to be a buyer, whatever, right? So when there's an imbalance in price and a certain move, both buyers and sellers are not getting a fair chance of liquidity. But when there is efficient pricing, there's both buyers and sellers in the market. It's like, why would we buy within this big move here? So if we were looking to buy here, there's pretty much no buyers in this time. There's only just pure selling. Yeah, but going back to topic, just imbalances are just when there's a gap in price, and a balance is when there's no gap in price. So for example, you look at this, whole move here, there's no balances in, imbalances in price. There's an imbalance here, but look what happened. Price came back up and wicked into it and then continued lower. So that wouldn't be a valid order block because the price has already been filled. Okay, so we'll talk about what makes a valid order block in separate videos, but in order for there to be a valid order block, there needs to be a wick that hasn't been cut. So when I say cut, I mean a balance that hasn't been cut. So if, as you can see, this is an order block here, right? There's an imbalance here, so that makes it valid. Breaker structures, right? Okay, and if we just let's focus on this as a better picture actually. So if we just focus on the most recent breaker structure, right, most recent order block, there's the order block, there's the imbalance, right? Price hasn't tapped into it. However, if price came down and then tapped into the imbalance and ran, that would when we'd adapt to new market changes, right? Not only would we adapt to new market changes, but that is no longer valid because it's been partially collected anyways. Okay, at a later date, it might come into it when price switches bullish, but in the moment when you're looking for day trading, when especially day trading, we need to adapt to new market changes because we can't forever hold on to the same point of interest. So for example, again, if we have an order block here, we're looking to sell, but price came already up and tapped into this area. Because when I say understand ranges in a different section, that you understood, when I say understand your ranges when price leaves a low, we're in a new range, right? But if price taps into the imbalance, that's when it would be that would be a point of invalidation, because if price taps into the imbalance and runs, and creates, breaks the structure and creates a new range, we're now in a new range. Because price hasn't pulled all the way back to the order block, it won't always pull back to the order blocks. That's why we have to adapt to new market changes. But yeah, that's imbalances and that's balance. And like I said, there's always videos and stuff being sent out in Discord. There's going to be webinars held, so everything that you may be unsure on along the way in the course, you can always touch up on just by asking me or anyone in the group chat, and we'll all help you. So yeah, that's pretty much imbalances, and just focus on the 3 candles, because that's what makes an imbalance or an efficient pricing. And you usually see this within trending markets. So pretty much is when price creates imbalances, like we've spoken about, right? Price is moving up, down, up, down. The reason why it's moving up, down, up, down, up, down is because there's imbalances. So when price is seeing that selling and selling and selling, right, there's no buying pressure, so price will have to refill price, continue down. It's like filling the glass with a bottle of Coke. It's when you drink it, it's all gone, so you need to refill it if you want more. But yeah, I'm gonna end the video here, guys. Again, I appreciate your time and watching these. If you have any questions, make sure you message me.